Hey everyone, welcome back to the channel. Today, we're talking about a company that's been making a lot of noise in the artificial intelligence and defense sectors, Bigbear.ai Holdings, ticker symbol BBAI. Now, if you've been following this stock, you already know it's been a roller coaster, the kind of wild ride that makes traders excited and long-term investors nervous. Over the past year, Bigbear.ai's stock has exploded more than 400%. Driven mainly by massive optimism surrounding its defense-related contracts. But the story isn't that simple, because while excitement is high, the company's financial picture tells a more complicated tale. So in today's breakdown, we're diving deep into Bigbear.ai's earnings outlook, acquisition strategy, financial metrics, and why analysts are still cautious despite all this hype. By the end, you'll have a much clearer view of whether Bigbear.ai is still a potential growth play or if it's drifting into overvaluation territory. Bigbear.ai has seen tremendous volatility. Its share price surged over 400% in the past year, but also experienced sharp pullbacks. Recently, the stock dropped about 5%, yet it's still outperforming both the S&P 500 and the broader technology sector over the last month. So, what's driving all this movement? The main factor is defense contracts. Governments around the world, especially the US, are investing heavily in artificial intelligence for military and intelligence applications. Bigbear.ai sits right in the middle of that wave. However, as the company gears up for its next earnings report, analysts are expecting declines in both revenue and earnings per share. That's a big red flag for some investors who believe the valuation might be running too far ahead of reality. Now let's talk strategy. And Bigbear.ai has been very clear about its approach. The company is aggressively focusing on mergers and acquisitions to scale faster. With a strong cash position of $391 million, Bigbear.ai has the liquidity to make strategic purchases that can strengthen its technology, talent, and overall reach in the competitive defense market. That kind of capital gives them flexibility. They're not just sitting on cash, they're using it as a growth weapon. But the challenge here is timing. Integrating new acquisitions in such a complex field isn't easy, and short-term execution risks can create volatility in both operations and share price. Of course, there are still headwinds. Revenue fluctuations have become a recurring issue, and procurement delays in government projects are hurting predictability. Even though the defense sector is expanding rapidly, Bigbear.ai's growth has been uneven, something that keeps both investors and analysts cautious. On the flip side, optimism remains strong because Bigbear.ai has positioned itself as a key player in government AI infrastructure. Its involvement in major defense initiatives, including multinational exercises like UNITAS 2025, demonstrates that the company isn't just chasing contracts, it's part of the global AI defense ecosystem. But the numbers reveal the tension between potential and performance. In recent quarters, Bigbear.ai reported an 18% year-over-year revenue decline and a net loss of $228.6 million. Analysts are predicting another 20% decline in earnings per share and around a 14% drop in revenue for the upcoming quarter. These are not small misses. They highlight the financial strain that comes from trying to grow aggressively in a highly capital-intensive market. Still, the company's free cash flow has actually improved dramatically, up 172%. Showing that despite profitability issues, Bigbear.ai is becoming more efficient in turning revenue into cash. That's a positive sign that their internal financial management is tightening. Let's zoom in on insider activity, because that often gives us clues about what's happening behind the scenes. Between August and September 2025, insiders at Bigbear.ai made 5 transactions totaling about $165,000. That included 3 tax-related transactions and 2 small stock sales, with no red flags or unusual activity detected. Executives involved included Kevin McAleenan, the CEO, Carolyn Blankenship, General Counsel, and Sean Raymond Ricker, the CFO. The largest single transaction was a $64,000 stock sale on August 27th. While insider activity was minor, the fact that all transactions were reported as standard and none flagged as suspicious suggests that insiders aren't dumping shares out of concern. Next up, let's look at profitability and valuation metrics. And this is where things get interesting. Bigbear.ai's gross margin in Q2 2025 came in at 27.97%, just a bit lower than the 28.5% it reported in Q1. But the operating margin paints a tougher picture, 85.34%. That means for every dollar of revenue, the company is losing 85 cents in operations. The return on invested capital, ROIC, is also deep in the red, around 89%, showing that current investments aren't yet producing meaningful returns. And yet, despite these weak profitability numbers, investors are still paying a premium. The company's price-to-sales ratio shot up from 5.17x in Q1 to 12.966 in Q2, and the enterprise value-to-revenue ratio jumped from 5.13x to 11.07x in the same period. This suggests one thing. The market is pricing Bigbear.Ai for future success, not current performance. Investors are betting that as defense AI spending explodes globally, Bigbear.Ai will eventually convert these opportunities into profits. Bigbear.Ai is in a fascinating position. On one hand, it's part of one of the fastest-growing industries in the world, AI for defense and national security. On the other hand, it's still struggling to translate that strategic positioning into consistent financial growth. The company's cash reserves give it breathing room, and its acquisition-driven growth plan could pay off long-term if integration is handled right. But the short-term risk is real: slowing revenue growth, negative margins, and the possibility that the stock's valuation has run too far ahead of fundamentals. Analysts currently estimate that Bigbear.Ai trades at roughly a 15% discount to its fair value, suggesting that while it may not be dramatically overvalued, it's still priced for aggressive future growth that must now be proven through execution. So, if you're an investor or a trader looking at BBAI, the key question isn't whether the company has potential, because it clearly does. The question is whether the current stock price fairly reflects that potential, or if the market is already pricing in success that hasn't yet materialized. In other words, Bigbear.Ai might represent a high-reward but high-risk play, the kind of stock that could either double again on strong execution or face a sharp correction if earnings disappoint. To wrap it all up, Bigbear.Ai is standing at a crossroads. Its aggressive M&A strategy, deep defense ties, and solid cash reserves make it one of the more interesting AI names to watch. But without a clear path to consistent profitability, investors should brace for more volatility. As always, make sure you do your own due diligence before making any moves in the market. If you found this analysis helpful, don't forget to hit the like button, subscribe for more deep dives like this, and share your thoughts in the comments below. Do you think Bigbear.Ai can turn things around and justify its valuation? Or is this rally running on hype? Thanks for tuning in, and I'll catch you in the next one. This is not financial advice.